Ready to dive into the world of online trading?
Let's do it.
We're talking crypto and Forex today. Two exciting but sometimes confusing avenues for folks looking to grow their wealth. It's like stepping into a bustling marketplace
I like that analogy.
with endless stalls and vendors, each promising different riches.
And risks.
Right, exactly. To help us navigate this energetic world, we're cracking open an insightful Motilal Oswal article today. You see, while both crypto and Forex offer the potential for profit, they come with their own sets of risks and rewards.
Different flavors for different traders.
Exactly. It's like choosing between a sleek, modern stall and a more traditional vendor, both promising but in very different ways. And here's a fascinating tidbit from our source material. Did you know that Forex trading has been around far longer than its digital counterpart?
It definitely has a longer track record.
We'll unpack why that historical context matters in just a bit. But first, our deep dive today will equip you with the knowledge to understand the key differences between crypto and Forex trading, and how those differences translate into varying levels of risk and reward. So first things first, what exactly are we dealing with here?
The million-dollar question.
Our friends at Motilal Oswal describe cryptocurrency trading as essentially the buying and selling of digital assets. Think Bitcoin, Ethereum, Litecoin. They're like the blue chip stocks of the crypto world.
The big players everyone's heard of.
Exactly. Forex, or foreign exchange trading, is all about the currencies we use every day. Dollars, euros, rupees,
The lifeblood of global commerce.
constantly being exchanged in a massive global marketplace.
What's fascinating here is that both markets exist to fulfill the same fundamental need, facilitating the exchange of value.
Interesting.
Whether it's the digital representation of value in crypto or the more traditional value of national currencies, it all comes down to the age-old economic principle of supply and demand.
Ah, the invisible hand at work.
Precisely. That interplay is what ultimately drives the prices in both crypto and Forex trading.
So we've got these two distinct trading arenas. But as our Motilal Oswal article points out, crypto and Forex trading actually share some intriguing similarities.
More than you might think at first glance.
Right. The article lists 4 key areas of overlap. And honestly, some of these surprised me.
Oh, like what?
Well, first up, both markets operate on the basic principle of supply and demand.
Ah, the age-old dance of economics.
Exactly.
And this highlights a crucial point for anyone looking to enter either market. Knowledge, particularly of the forces that influence price movements, is paramount, whether you're trading Bitcoin or euros.
Makes sense. The second similarity is that both markets offer a relatively smooth trading experience, especially in today's digital age.
Absolutely. The online nature of both crypto and Forex trading has been revolutionary in making these markets incredibly accessible.
No more jumping through hoops.
Exactly. No more jumping through the hoops of traditional trading floors.
It's like having the trading floor right at your fingertips. Which brings us to similarity number 3. Both crypto and Forex can be traded 24/7.
A global marketplace never sleeps.
True. Though I wouldn't recommend staying up all night watching the charts.
Probably a good idea.
And lastly, both crypto and Forex trading can be started with relatively small amounts of capital.
Low barriers to entry, which is great for new traders.
Exactly. You don't need to be a Wall Street hotshot to get started.
That's the beauty of it.
Okay, so while it might seem counterintuitive, crypto and Forex do share some key similarities, especially in terms of accessibility and how they operate. But let's be honest, there are also some important differences, wouldn't you say?
Absolutely. While they share some fundamental similarities, understanding the differences is crucial when deciding which market aligns better with your trading goals and risk tolerance.
Speaking of risk, the Motilal Oswal article brings up a key difference between these two markets. Crypto, being the newer kid on the block, is often considered much riskier than Forex.
It's true. Cryptocurrency is prone to extreme volatility.
Oh, absolutely.
Remember, it's a completely new asset class, still in its infancy.
Right.
Its value can fluctuate wildly. In response to news, speculation, even a single tweet can move the needle.
You're right. Didn't Elon Musk tweeting about Dogecoin send its price skyrocketing a while back?
Exactly. That's the level of volatility we're talking about with crypto. Forex, on the other hand, is a more established market.
With a longer track record.
Exactly. While it certainly has its share of ups and downs, it tends to be more stable overall, especially the major currency pairs.
Makes sense. So a lot of crypto's riskiness stems from its newness and the lack of regulation, right? That's like that exciting new stall in the marketplace, potentially big rewards. but also a lot of unknowns.
Precisely.
Yeah.
The Motilal Oswal article specifically points out the unregulated nature of the crypto market.
Right, right.
This lack of oversight from central banks or governments creates uncertainty and the potential for manipulation, adding another layer of risk for traders. Forex, while not risk-free, operates within a much clearer regulatory framework, especially in India, where getting started is as simple as opening a trading account.
That makes Forex seem much more approachable for someone dipping their toes into the trading waters for the first time, especially here in India.
It certainly has a lower barrier to entry, which can be a major advantage for new traders.
Okay, so we've explored these two stalls in the bustling marketplace of online trading. Crypto, the sleek newcomer, and Forex, the established vendor. Both offer the potential for profit, but with varying levels of risk and reward. What are some key takeaways our listeners should keep in mind from our Motilal Oswal deep dive?
The key takeaway here is that both cryptocurrency and Forex trading offer exciting opportunities to tap into online trading. They share some key similarities. Both are driven by supply and demand, both are easily accessible online, and both can be traded 24/7. But, and this is a big but, they also have some fundamental differences, primarily when it comes to risk and regulation.
It really is about choosing the right stall for your individual risk appetite, what you're comfortable with,
Mm-hmm.
what you're hoping to achieve.
Exactly. And that brings us to a crucial point. There's no one-size-fits-all answer. The best choice for you depends on your risk tolerance, your investment goals, your understanding of the market, even your comfort level with the technology involved.
So do your research, and don't be afraid to start small. Now, before we wrap up this deep dive, I want to leave you with one final thought. Our Motilal Oswal article briefly touched upon the concept of portfolio diversification. You know, that old adage about not putting all your eggs in one basket.
An essential principle of investing, no matter what market you're exploring.
Exactly. So here's something to consider. Could strategically incorporating both crypto and Forex, even if it's just dipping your toes in each market with a small percentage of your capital, actually be a way to balance risk and reward in your overall trading strategy?
That's a fascinating question, and it really speaks to the importance of continuous learning and exploration in the ever-evolving world of online trading.
I love that. There's always something new to discover, new strategies to explore, new insights to gain. So keep that curiosity alive, do your research, and remember, the most important investment you can make is in your own knowledge. Thanks for joining us on this deep dive into the world of crypto and Forex trading. Until next time, happy trading.